Greetings, Dr. Jeffrey Scott, and this is my weekend market update. I'm doing this on Thursday, July 3rd, which is unusual for a lot of reasons. One, Thursday is the last day of the week this week because obviously the markets are closed on July 4th. Um, and typically I do these on Sunday, not on Friday, but I want to have some time with the family. I want to go out and spend some time on my boat in between the thunderstorms, and I want to enjoy the weekend. So let's get this out of the way and I can go on and have a great weekend, and I hope you have a great and safe holiday weekend as well. If I make some changes in my thoughts, if I find some great looking stock picks over the weekend, during my downtime, I'll do something Sunday night, and I'll have my wealth charts video out Monday. So title today is Have Markets Moved Too Far Too Fast, and why I think we might be due for at least a pause this week. Again, this is July 3rd, 2025. My name is Jeffrey Scott, Market MRI Pro at gmail.com, and my Google group is called Top Down Trader. This is for educational purposes only. Anything I talk about should be taken in the spirit of education, not investment advice. The intent of the video is to demonstrate the tools of top-down analysis and how I apply them. Trading involves risk, and you are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in this report. Excuse me. Trading stocks and options should be considered risky, and you should consult with your financial advisor before making trades. And I am a medical oncologist, which means I give chemotherapy, not tell you how to manage your portfolio. And I've got tools in multiple platforms, but trade as an independent. As I mentioned, I do a video for stocksanddocs.com. Those of you that are looking for wealth charts, that's where you'll find it. I'll have it on Monday before the market opens. My Google group is called Top Down Trader. Why should you join? Well, I don't always put my videos up on YouTube. That's the place I usually put them first. It's a great dialogue, and you get discounts on my products, and we do education to support all the different products I brought to market, whether it's in wealth charts, TradeStation, TradingView, Market MRI Pro, or soon to be Metastock. And the way I communicate with the people that own my products and those that don't is through the Top Down Trader group. Love to have you join us there. Is there a recession in our near future? I always look at this and I give you the same answer, which is there will be, but probably not tomorrow. And why would I say that? Well, you don't get a recession until you've recovered on both the 10-3, the 10-2 year above the middle of the zero line of a yield curve inversion. It usually occurs not while we're still bouncing around there, but after we've truly recovered. And it's variable when that happens. It can be right away or it could be sometime. Well, this one is clearly going to be sometime. Yes, with the tariffs, yes, with a Fed that's clearly too restrictive. I think that we are at risk of a recession coming, but hopefully the Fed will do some cuts and keep us out of that. But what am I seeing right here is we're still negative on the yield curve on the 10-3 months. It's been dipping up and down. It finished this week at 0.07, while the 10-2 is positive. There's no evidence of credit tightness, and the Philadelphia Fed Diffusion Index, which was updated a couple weeks ago at -4, is above -20. Typically, we have recessions from -20. Know your news and earnings. Not a busy week next week. We're going to get the minutes of the Fed's May FOMC meeting. I think we've seen some of that play out in real life with some of the discussions with some of the Fed heads talking possibly about a cut in July. But I think the payroll numbers and the employment situation that we got today on Thursday was probably strong enough that we don't see it at the July meeting, but we'll wait and see. Jobless claims on Thursday are always important, and we got a couple of Fed speakers, but we will get those minutes on Wednesday. They might be the highlight. And whenever I see Delta earnings, I know we're about to start the next quarter of earnings, and so we'll be looking for some glimpse into how the airlines are doing. and then it will start to pick up in the subsequent weeks. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. Here are two charts supporting a pullback or pause to refresh. One of them comes from EdgeRater for reasons that Praveen is working on. Our data provider, we weren't able to build the buckets on the S&P 1500 the last couple of days. And so we had this on the something else on the NASDAQ maybe last week. And so we're trying to get that figured out. So I thought I'd go old school, go back to EdgeRater, and you could see on EdgeRater the buckets are, oh, sorry about that, over 25%, and clearly a big shift to the right. This is approaching overbought, and when I see this, I look for either a pullback, mild pullback, or a sideways move. In an uptrend, this doesn't mean the end of the world, but it does suggest that we've gotten a little bit ahead of our skis. And then this is the Warden indicator, the T2121, one that Sagar thought so much about when I showed it to him that he's made it a part of his program. And I have it in Market MRI Pro as well. But whenever we get up to the top of this line, the market turns down almost every time. It could be just a little bit of a sideways move. Okay. It could be a move like this. It could be just a slowdown of an uptrend. But we're at that line now where we expect at least a sideways move. It doesn't get much more extended than this. And then you can see the opposite occurs when you get down to the bottom. You typically see bottoms and reversals. So these two charts have me thinking that we're almost certainly going to see a pause coming. Again, a pause can be just more market rotation and new leaders coming in and the old leaders taking a rest. But I think something's going to happen. Now here's the counter argument. Here's our Orange County 2025 June Leaders Index. And after basing now for pretty much the whole month of June, we just broke out. So I put those two together and say I don't think we got a big pullback coming. I think we might get a pause to refresh. A little sideways movement would be totally fine, reasonable, and not a problem. If you're interested in Market MRI, I am running a special through the end of this week, July 11th, I guess, at midnight. Last couple of weeks, I've done a couple of videos, especially last week, showing some of the things about it, Market MRI Pro. If you have questions about it, reach out to me at marketmripro@gmail.com. And there's $400 off, $100 if you're part of Top Down Trader, and $300 launch. And then consider joining the Top Down Trader group either way. And if you got the program and have some questions, coding at marketmripro.com. On to the charts. Oh yeah, I also asked last week about having a live meeting in Florida. I've had 4 people with soft commitments. If I get to 10 this week, 6 more, then I'll start looking for a venue. The meeting will be in late October, immediately following my buddy John Person's meeting. His meeting, let me look at the dates, I believe it's the 24th and the 25th, which is Friday and Saturday. I would hold mine on the 26th and the 27th. And my hope is by the time you leave, you'll be able to use the tool as well as I can, but really understand what goes into the tool. What am I looking for? What do my different signals mean? So let me know. I need 6 more people to give me a soft yes, and I'll start scheduling a meeting. All right, and obviously I'll figure out the price and things like that if I get enough people interested. Typically it's 2 days in a hotel. I take you out to dinner the first night, and I feed you breakfast and lunch both sessions. So it's typically, it probably pushes $1,000 for the 2 days. But I don't make any money on the meetings. I just want to make sure you get good education. So just pull up Market MRI Pro. So if we look at 1-day close, you can see the Qs led the market up 0.98. The Russell, which just had a fantastic week, up 0.93. Spiders 0.79. Diamonds up 0.76. all of it up in the upper 25% of the range. So all had strong finishes. The dollar was up 0.5%. That's an improvement over the last while. Bitcoin was down a tad, and the volatility dropped again. Now this says 5 days, and I think it is 5 days, so we only had a 4-day week, so this would include Friday last week. But you could see the outperformance of the Russell and the diamonds have both made a big move over this period of time. Um, Cheers for triple digits. You build new highs and you build new bulls on new highs, not new lows. And we now are triple digit positive new highs minus new lows at 12 months on both the NYSE and the NASDAQ. That is a huge improvement. We haven't seen triple digits on both in quite some time. If we look at the S&P 500 and we look at the sectors there, tech, financials, industrial led, another high tech day. Trailing were materials, staples, and real estate, healthcare, some of the more defensive plays. You could see the only two that were down, and to say down, minimally down, were staples and materials. First, solar had a huge move, and you can see solar was the top performing theme. Clean tech, cybersecurity, look at CrowdStrike, software, lithium, cloud, cybersecurity, energy, renewable energy, robots, again, a growth related story there. Over to the right are S&P 1500, NASDAQ, and NYSE. We're looking at sectors, industry groups, and advances. The blue or green are today, which is Thursday. The gray or white is from Wednesday, and you can see an improvement in the number of positive sectors, although less industries were positive. 10 out of 11 sectors were positive, 63% of stocks were up. On the NASDAQ, similar to the prior session, 82% of sectors, so that would be 9 out of 11, and 75% of industry groups. And if we keep going down here, you can see 65% of stocks were up, and an improvement in the NYSE Abroad Index was 75 and 79% of sectors and industry groups up, and down below you can see 66% of stocks. So not one of those 80% days, and that did take some of the heat off the market perhaps, but it was still a very strong day in the US markets. If we go to the timing briefing and look at the daily charts, you could see runaway big moves. We're starting to separate a lot from the WMA, and we'll talk about the high jump later. That's one of the things I look at for markets that are extended. We're starting to get extended. But if we look at the buy-sell signal, whoops, I hate when I do that, you can see we are clearly in a buy across all of these major ETFs on the daily. If I want to look at the more intermediate term, not short term, I might look at the weekly. And when we look at the weekly, when it pops up, you're going to see, there we go, just beautiful moves on this V-shaped recovery. New highs here, approaching new highs on the diamond. Still a ways to go on the Russell, but for many weeks we've been in a buy. And you can even look at a monthly model, and the monthly is also, well, it's turned positive on the Russell, and it's been positive on the others for some time. So it's hard not to be long this market, but I think on the fine-tuning aspects, we're probably in need of a little bit of a slowdown, pullback, a modest pullback or sideways move just to work out some of that overboughtness I showed you in the slides. If I look at the US index ETFs, you could see 0.79 up on the spiders. A nice session, and you can, as we've talked about before, really strong seasonality here. You see the golden cross of the 50 over the 200. You could see volume dropping, which really should surprise nobody in what we have here, which is a holiday shortened week of trading. And you can see today the NASDAQ volume was down 25% from normal, the NYSE 40%. So it's hard to make a big deal out of anything today. If you look at the Qs had a super nice session, up 0.98. They were the leaders. The diamonds were up 0.76, and the Russell were up similarly to that 0.9 something. So what you really see are super strong uptrends after a V recovery. You see seasonality, that's positive at least for a couple more weeks. You'd expect volatility to be down in the markets, and it was. Let me get the right bar, down 1.5%. And the dollar, which has struggled on this trend line going all the way back to when it peaked in December, is way down, and it was up a bit, 0.5% in the markets on Thursday. If I said Friday, I meant Thursday. Commodities certainly was a risk on for the markets. Gold, I guess, because of that, and somewhat defensive, was down 0.68. Silver diverged. Silver was up 0.81, perhaps because of the industrial uses. Oil had a good day on Wednesday. Thursday gave back 0.5%. Natural gas is horrible. And then if we look at the 10-year and the 30-year with risk coming in after, risk on coming in after that employment data, you could see the 10-year was up 1.35 and the 30-year was up 0.87. 30 years at 4.88, we're keeping an eye on that 5%, which seems to be a problem when we get up there. The buckets, as I showed you, the buckets already on the spiders. Now the buckets improved a little bit today on the spiders, meaning they were less bad than they were yesterday, but they're still pretty extended. And when you look at this, this is what I would definitely call a right shift. Now you only have 13% of the NYSE up, 14% of the NASDAQ, and 20% of the Russell. So you could get through this and this level of an extended market by just seeing some element of consolidation and sideways movement. It doesn't have to be much of a pullback. If we look at market breadth, you can see just massive moves again on the NYSE on the left, the NASDAQ gapped up. Boy, this is getting frothy. We're starting to see the stocks above the 50 and the 20 getting to levels that are getting extended, and you might expect a little bit of a sideways move or a flag like we saw in here. What else? Again, the volume wasn't anything this week. We had the golden crosses on both of them. If we go down this list here, you can see the new high, new lows really popped. I think clearly the biggest one probably of the year. AD lines very positive as we're up down volume. We continue to fire bangos every day in the market, which just is exuberance to the buying side, and eventually that exuberance ends in the market, wallows a little bit. Again, it could be just sideways. On the market breadth and the new high, new lows, what I want to look down here is this top one, which is the 13-week new high, new lows. And whether I look at the spider where it's at reversal area, the NASDAQ at reversal area, the S&P 1500 at as high as it gets, and the Russell 2000 at a reversal area, something's going to give. And again, when you look at stocks above the moving averages, especially the green and white, the green being stocks above the 20, the white being stocks above the 50, we are at levels where you expect to see a reversal. I am expecting a shallow pullback or sideways move and more rotation here. I am not expecting the market to take a big dump. Seasonality, we've built it into the program. It's got a scanner. Where I really have done is I put it onto all my charts so I could see what seasonality is going to give, but you can look for hit rate, percentage changes, and this is something that just comes with the program. There's no additional cost, and we'll try maybe this week, and Praveen and I maybe do a live meeting, have to look at the calendar, maybe Wednesday or Thursday this coming week, and talk about how we use the seasonality and what Praveen built. It's something that I've historically used seasonality a long time, and there are certain plays during the year that seasonality just is. To say it's phenomenal would be a underestimate. So I'll run that while we're going and talking some more. On the rate, oh, there it is. So this is on the 7th, and if I look at going out 30 days, edge is a factor of movement and how often. And so you have stocks here like the top bunch of stocks looking back over a number of years, you can see the years listed there, have had 100% hit rates over the next 30 days. And some of them have had moves like Carvana of 40%. Now, you never expect a 40% move, but what I'd like to do is probably come in here. And again, these are the things that we want to spend some time. I want number of years to be greater than or equal to 10. And that's going to take out some of those off the top. And now I'm interested because numbers have come down. But now I'm going to look at things that have decent hit rates, 80%, he's at 100%. And these are stocks that have, this one has 10 years of data on. And Kinsale Capital, that's what I want to see. This is if I look at both 5 and 10 year seasonality, they're very, very strong here. So we'll go over more about the scanner, but I once paid, I think, $10,000 for Best Choice with lifetime data and lifetime software. You get that here as part of the program. Let's go look at stocks for a few minutes. And, with my concern and my thoughts being that we're likely to see the markets at least pause here, I'm probably not going to go really big on new purchases. I'll probably manage what I have and still look for new opportunities because I do think the market's going higher. I mean, I've been riding Hood for quite some time, as well as Sezzle, SE, which seems to be done. I entered Honeywell a couple days ago after we talked about it during one of my videos. So let's take a look at the markets. You can see here, clear all the filters. We've dropped down to 3,400 stocks from 3,700. That's probably the volume. What I have here is the NASDAQ, NYSE, and the Amex. I have them filtered for $1 and 100,000 shares. And with the low volume that we saw, I bet we dropped a bunch of low volume stocks. No big deal. I don't need low volume stocks. Each of these stocks has an industry and a sector attached to it. When I go into the top-down view, I can rank these by, let's look at one-day move, perhaps. So I'm ranking the sectors on the left and the industry groups on the right. This one I know is wrong or is something that's got to be put into a group. I don't know if it's an IPO, but I don't think we had a group going up 24% or 21%. Typically when that happens, it's an IPO or it's something that is it's an IPO. We're not going to worry about that one. It'll get put into the right group. So technology led. Let's look at technology, financial services, and communication services. Why did I pick those? I picked those because, well, utilities are hot because of data centers. So let's take those. Those are the top 4 sectors. These are the performance of the industry groups in those top 4 sectors. So let's just go down the top. 1, 2, 3, 4, 5, 6, 7, 8, 9, and 10. So these are the top 10 industry groups in the top 4 out of 11 sectors, and there's 414 stocks. Let's go in here and let's filter them for $5 and 500,000 shares, and now we're left with 200. I could look at 200, but I don't want to look at 200. Let's rank these on short-term momentum. Let's just go down the list and see if anything looks good. Datadog, this is inclusion to the S&P 500. A lot of times that comes back a little bit, so I'm not going to chase this. You could see it's up near the top of its high jump bar. That to me is sometimes enough not to chase it. I'll have to have Praveen put the label back on that. I like the label on that. Although you could see over to the right, it's at 90.31. So you know what you're going to see here. Everybody's buying it because it got added to the S&P 1500 instead of my Robinhood. But massive volume. EMS is already in play. The CPR fired back the day before. And I've got gap, volume, breakup, momentum, strong relative strength, and OBV. If this was on earnings, all right, then I would be, or on a news event, not inclusion in a index, you joining the S&P 500, then this would be one of those Quillamogy episodic pivots, and I'd be all in. I just don't think that things continue to go higher just because they get included. You get the early buying, and then it'll seem to drift down. The next one is SNPS, Synopsys. Now, Synopsys, I believe, was up because of a law change that's going to allow them to shift their stuff into to China. Yep, it lifts China cut chip curves. Again, all you got to do is click on this and you're going to get this brought up. Of course, he wants to verify that I'm a real person. And there's the article sitting inside of Barron's. I think that's a really cool feature that we were able to build in. So this is up on news, but that's kind of meaningful to me. So I might add synopsis. So let me just go here into my, oh, do I really want to do that? No, I don't want to do that now. I would have probably cleared my shorts and then I could add things. So synopsis looks interesting. ServiceNow, which to me is always going to be a winner in the AI business because so much of what they do is tied to supporting companies as we implement AI. They've got big data and cloud-based programs as well. It's an expensive stock, sideways move and a bit of a breakout here. Seasonality is mixed, but I like ServiceNow, a little bit pullback to the 50 and the breakout. ANSS, another software company, decent seasonality. Let's see what happened here. Earnings came out April 30th. Earnings have been okay. Multiple forward is 34. A lot more, well, they're slowing down their growth. I don't want to see. Doesn't pay a dividend. I always like to look at when earnings are coming. They're not to July. Was there any news here that mattered? Huh. China delays approval, but that is back a couple weeks ago. So maybe they think with opening up the deal's going to get done. Cadence, this is one that benefited from the China deal. Again, similar to Synopsys, it's the kind of thing that could propel something higher. Oracle, this one was interesting. They're up because they cut a deal with a data center to provide a ton of energy. OpenAI leases 4.5 gigawatts from Oracle. That's like a small town versus energy. Unbelievable. What a great move. This stock used to be dead for a long time. In fact, if you throw on a monthly chart of Oracle, you can see how good it looks now. But look for how long it was kind of down there in the 30s. Someone who I've spent a little bit of time with, Seema Verma, used to be in government and healthcare, is probably responsible for a lot of their great move. She's one of their new leaders. CrowdStrike, I mentioned before. CrowdStrike is at all-time highs, and stocks at all-time highs have a tendency to go higher. Why it's not, we're on the monthly. Let's go back to the daily. That's why I didn't have a high jump. It's not quite up to 100%. We can see it's at 85. What a beautiful, orderly uptrend. And again, things in motion seem to persist. Seasonality starts to deteriorate. That's something that I might pay attention. MicroStrategy, we looked at it last week when it had the double dots, and we thought, oh wow, it's kind of good here. And then I thought the market didn't behave. It pulled back, but boy, it's running now. So MicroStrategy is going to go whichever way Bitcoin goes. Sort of a leveraged way to play Bitcoin. OLO. God, now I'm having a mental block. Leading open SaaS platform for restaurants. Being acquired by Thomas Bravo. Well, I guess that doesn't matter to me. We're done. CoreWeave rather. What a great IPO this has been. They announced today doing some things with servers built by Dell using some of the leading NVIDIA chips. Certainly looks like a pullback and it wants to run again. Juniper Networks, I think they just closed out a Juniper Notebooks closed. I don't think it was Network. Nope. It's also a merger. So next, CyberArk, another one of these Cyber stocks, obviously, pulling up. Nice little pullback here. Seasonality, not anything exciting. So I got to look at team because my daughter works for them. Struggling below their 200. MDB, nice run here, but pull back. So all that I did here, and we looked at a number of stocks. Again, I'm not the most enthusiastic to buy here because I do think the market is begging to have some type of a consolidation here at some point. And some of these big growth names may get a little bit hurt, but like I said earlier, all my signals said that the market's still going higher. So that's how I look at the market from a top-down perspective. Now, sometimes I'll do it a little differently. Sometimes I will just rank by 2-day momentum the leading industry groups, and I'll go 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, and see what we get. And we do see a couple things that are different. RGC, dead to me. Don't know what happened here. Don't really care. First Solar is one that is breaking out here. This is one that had some upgrades and it's got some really good seasonality here. And I mentioned earlier where solar was one of the leading themes. Greenbrier earnings are out. Train coaches and other on the engineering construction side, good seasonality. This is the kind of thing I think that Quilamaji would follow. And stock was beaten up and sideways move. Big gap up on earnings. This has turned out to be an episodic pivot, and this goes higher. One thing that's just hard to believe how high it's gone is Royal Caribbean, as you can see, is now a close at $335. You can see the high jumps at 100%. If I was smart enough to own a lot of this, I'd probably be looking at taking some profits here. Just me, I'm not telling you how to manage your money. Remember, I'm not a money manager. I am a oncologist who gives chemotherapy, at least did when I was younger. VST is one of these utilities that supports the data centers, and you can see, wow, the move from under 100 to 200 since April. Little pullback here. Sideways seasonality, not too much exciting there. Well, I should say it differently. Could be a great opportunity to buy here. The seasonality is kind of sideways. Two different ways of looking at top down, one starting with the sectors, one just jumping ahead and looking at the industry groups. Now, many of us, myself included, won't have the patience to look at stocks that may not be leading, except they're in the leading groups today, although we did see some nice leaders there. And I think sometimes it's more fun to go into and do top down. So let me show you 2 or 3 techniques of how, bottoms up rather. I've already got the price and volume. Let's put pullbacks in an uptrend, hit OK, and let's rank these by the number of up impulses. XPOF had a nice breakout. Exponential Fitness. Wow, massive volume, gap, breakout, momentum. Relative strength at OBV looks super strong. Got to be a news story here. Analyst day tomorrow, which is 5/29. Nope. Anything happening here? Earnings were at the 8th. Don't know what happened, but boy, that looks good, doesn't it? Probably worth finding out. Relatively cheap stock. RNW, renewable energy. Sideways move, big gap up. We know renewables are good right now. Not a seasonality story, but not a negative seasonality. And what do we see here? It got a bid for a buyout. Well, we don't chase these things unless you know something. We already looked at OLOU, Unity Software. So talk about this pattern here. You must have the weekly bongo blue saying that you are in an uptrend. The daily bongo had to flip from red to blue in the last 9 bars, telling me that you had a reversal. And then you have to have the dots. So this is interesting. Unity Software, it's in an uptrend, pull back, it just broke out here with volume, breakout momentum, relative strength, and OBV look good. Taiwan Semiconductor, or excuse me, Tower Semiconductor. Uh, a breakout from the 200 here, decent seasonality. Volume breakout momentum, relative strength and OBV look good. We looked at TripAdvisor a couple days ago. Wish we would have bought it. Broke out above the 200 here and super big move. And it's got three of the dots in a row. That's why we looked at it here. Something's going on with TripAdvisor. And you could go down the list. There's ServiceNow. A lot of things in here look interesting. So that's one approach from a bottoms up. Another approach that I like to do is to let's kill this and start over. And let's drop this down and look for price over 5, volume over 500. And let's look for my 2-day up momentum. That has been my go-to. Well, TripAdvisor triggered the 3rd. This was on the list yesterday. So we would have known yesterday to be looking at this. PRA, Pro Assurance, that doesn't look like an actionable chart. That looks like something that's being taken over, acquisition. ZVRA, I don't have a lot of stocks that begin with a Z. Big uptrend, a pullback, a breakout here. Seasonality looks okay, especially on the last 5 years. Volume has come in. Look at all those blue circles or dots. Relative strength and OBV look good. I would probably do some research on this one. I will be doing some research. New bullish call. Do they have a why? Again, I think this is great. Not only do you have the news story, but you can pull up the article and see why. So I wanted to see why. I didn't. Available to fly members only. Bummer. I'm not a fly on the wall. SGML, cheap stock, Sigma Lithium. You saw renewable energy. You saw EVs. This would probably be supporting that way down in its pattern. HMC, Honda Motor Corporation. I bought myself a new BMW this week. A very polarizing car. It's called the XM, which is their most powerful car that they have. It's a race car. It's a hybrid SUV. They gave me a $37,000 500 rebate. When's the last time you bought a new car in the same model year in July, not in December, and you got a rebate of $37,500? That worries me when it comes to the automobile industry. Next tracker is a solar play. Sideways move, pull back to the 50. That's the pullback we were looking for. 2 dots in a row. This one looks really good. Seasonality is not going to be helpful, but it only has a 5-year. I'm not going to worry too much about it. I like Next Tracker. And Agenus is a biotech. I'd have to do some work on this one. I don't know anything about it. So the other thing I like to do on this is to, again, use a filter here. Let's go to the 5. Well, we can go to, let's just look for the new highs. $5 and 500,000 shares, hit OK. And then let's do this by dots. And just look at some of the stocks that made new highs today. Leonardo da Vinci DRS's, not much volume, but it's in an EMS, had a CPR momentum in a breakout. And both of these are crossed above. Seasonality looks okay. ZS, Zscaler, big gap up and a move. I want to make sure it's not takeout or something like that. Momentum driven picks. Zscaler, I know we use them in our cloud-based tools. RGC, looked at this before. Don't know their story. Wouldn't be chasing. I gotta see the news. A stock split. So it was a reverse split. All right, so maybe there's something here, and I shouldn't poo-poo it. Herbal medicine gained over 400% on Monday, 64,000%. I'll make sure we adjust for the split because I think there was a split here. I don't know anything about this company. I'm still going to pass. It looks bizarre. All right. Red Brick. rubric, uptrend, pull back to a great place to buy on the 50. I'd probably put this on my buy watch list if it takes out the 17 and goes higher, and you could go down the list. So let me make some comments and we'll say goodbye. We're at 40 minutes. There are a lot of good stocks to look at. I showed you some solar stocks. I showed you healthcare stocks. And here's rubric. This one looks interesting as well. I showed you how I look at the market from a tops down and a bottoms up. The market will drive 60 to 70% of the action next week. I think the market wants to pause. I think the market wants to give a little bit of a sideways move or more rotation to get the leaders to do sideways moves while the laggards catch up, and therefore you wouldn't even see any pullback. But I still think we're going higher. Have an awesome, safe, wonderful 4th of July. If you like this tool, it is a great tool for top-down analysis. It has been created to mimic how I trade. Everything I've showed you is already part of the program. We're not done yet. We got a few more things to put into it. Plus, it comes with a lot of education. Just reach out to me at marketmripro@gmail.com. It's got an extra $400 off through the end of the 11th, and have a safe and healthy and happy 4th of July.